And let me now bring on board Mr. Sumen Chakrabarti, President and CFO of Dr. Reddy Laboratories. Mr. Chakrabarti, good morning. Thank you for joining us. Let's first talk about the kind of numbers you've reported for the quarter gone by. Margins for Q3 came below estimates due to rising R&D cost and selling expenses. How do you see your margins going forward for rest of the fiscal and then for rest of the year?
So Q3 our margins were low, but that has to do something with our new product launch. We didn't have any significant new product launch in US. We had only one, sildenafil, which was insignificant. So R&D cost has gone up, which is now 7%. It was in Q3, and it will be north of 7% going forward. But overall margin depends on our new product launches, and as we are expecting approvals, and we are ready for launch even in US market. As and when approval comes, they will be launching immediately. So we expect margins to be sustained in coming quarters.
Right.
Whatever R&D as a percentage of sales goes up, we'll also like to improve our SG&A productivity and compensate that.
And could you give us a timeline by when do you see these approvals actually coming in?
It is becoming increasingly difficult to predict accurately when we are going to get approvals of specific products. So there are a couple of products for which we are ready for launch. The approval may happen anytime. It may happen even in Q4, or it can go over to even Q1 of next financial year.
What is the FTF pipeline, first to file pipeline? Which are the new ANDAs that the company has filed? And since the big differentiator for Dr. Reddy always has been your focus on Para IV filing, are you planning to file anything from within that Para IV basket?
Yeah, we are not disclosing our portfolio as such. Only we can tell the number of filings that we are doing and the pending approvals. As on date, we have 65 pending approvals ANDAs. And out of which there are roughly 11 which will be FTF. But every year we expect to file around 15 to 20 ANDAs in US market, and there will be some attritions between filing to launch, but we expect to launch more than 10 products every year in the US market.
Right. Russia is a big market for your company, and along with CIS, Russia contributes to about 15% of the total business for you guys. What kind of growth in new product launches can we expect from the company in Russia?
Yeah, Russia has been a good market for us. Even at a higher base, we have been growing significantly there. But within Russia, for example, OTC, where in the industry it is about 40% of overall Russian pharma market. Dr. Reddy's over the years have been experiencing much more growth in the OTC segment. Our CAGR is in excess of 30% there. And today our OTC itself is around 30% of our total sales in Russia. And apart from our own organic pipeline, we have been getting products from even other manufacturers and selling in the Russian market. So we expect a good growth momentum in Russia CIS. I mean, beyond Russia CIS, also overall emerging markets would going to be a good growth driver for Dr. Reddy's in next few years.
Can we witness any material changes in the fundamentals of your German business? Will pricing pressure ease going forward in your European stroke the German business?
And there is a significant change we made in the German market, that we are not going for tender aggressively, and because it was not a bottom line accretive. There was of course a huge volume growth, but since it puts pressure on our capacity, where we can utilize the same capacity for serving some other markets. So going forward, we would like to really focus on some product portfolio where there could be again limited competitions in German market. But overall, at this point of time, we are not very bullish on the European segment for our growth.
Right. The street feels that branded generics in India and Russia face competitive headwinds. The growth in Europe remains tepid while visibility beyond FY14 is low in the US. Is this a concern that you would agree with?
See, there will be always, competitive challenges which will be there in any market. But US, as I told earlier, we expect to file 15 to 20 NDAs every year and expect to launch more than 10 products every year. So we are bullish in terms of US generics. At the same time, emerging markets, we are quite hopeful, not only in our current territory, but also some new markets, specifically Australia, New Zealand, Australia as well as in China. Venezuela, for example, despite the currency devaluation, we have got significant market size there. Our current market there is in excess of $30 million. So overall emerging markets seems to be a very good growth driver for us. In India, of course, with the new pricing policy, there will be some adjustment which is going to happen. But we have grown by 12% in the current year, and we hope to continue to grow in India better than the industry growth rate.
Finally, any products that the company is looking at monetizing going forward in the near term?
Again, as I said, I am not specifically disclosing in terms of our pipeline or portfolio in terms of specific products.
Right, so tell us if we can see any uptick in the margins going forward.
No, we want to sustain our margin. As I said, our R&D, we are going to spend more because this is going to be the engine for growth in the future. But despite spending more in R&D, we want to sustain our overall EBITDA margin.